We're having fun talking politics here, but for a moment, I've got to talk money. It's President's Day. The markets are closed. We can still talk some policy. How about these reciprocal tariffs? What do you think would be the likely impact on the economy and the markets?
Let's be very clear, just because it's President's Day, markets never sleep. So even though they're not trading today, all these things are moving and stirring. Look, the tax cuts are a big deal. He campaigned on it. It's a big deal politically. It's a big deal for markets. And I think that to the extent that the tariffs right now are what people are focusing on, they might be missing the bigger story with the tax cuts. Reciprocity in the tariffs would exacerbate some distress in markets. But the question is that ever going to happen? He's so far used him as a negotiating tactic, which makes market actors like me totally unable to comment because I can't comment on tariffs that never happen. The threats of them are one thing. Them actually going through is another.
It seems like the policy is put money into people's pockets through tax cuts of various kinds, take money out of the economy by cutting spending of government to balance it out.
I mean, we haven't seen the spending cuts yet. So far, they're focusing on waste and fraud. That's a lot of what DOGE is doing. Congress is to cut spending. Now, the way this Budget Finance Committee set it up, Stuart, they have to cut $2 trillion over 10 years to get $2 trillion of tax cuts. If they don't find $2 trillion of cuts, they're not going to get the tax cuts. That's the way this budget reconciliation window is going to work. So they're going to have to find some spending cuts. That's not easy to do.
The market rally seems to have paused recently. Yeah. What event or what move could start the markets rolling again? What a breakthrough. How do we get a breakthrough?
The tax cuts. That's the lowest hanging fruit, because if you say we get really good earnings results, that's already priced in. You have to get good earnings results just to keep things from dropping. So that good earnings going forward is not going to drive markets higher. That's baked in. Tax cuts. That's the big story.
Okay. Stay with me for the hour, please. David, thanks very much.
It also increases the debt limit by $4 trillion. Things are shaky, but talks continue because if House Republicans can pass this budget resolution, that means they're able to more easily advance Trump's legislative agenda. They just need a majority vote in the Senate, which would circumvent the Democrats. So a lot of reason to get this through, but currently facing some obstacles.
It's been like this for a while, hasn't it, David?
If they stall there, the key is the Senate's going forward with a two-bill approach, which punts this thing till near the end of the year. That won't be good for markets.
Let's start with Meta. Does that company want Trump to intervene with the Europeans and they're in setting rules for us? Isn't this a negotiation, David?
Well, sure. I mean, it's kind of funny because they had to deal with the same thing with U.S. regulation. Right. Now they want the U.S. to help them with European regulation. Microsoft could have used that in the 90s with Europe, U.S. intervention.
I know it well. All right, David, thank you. Apple, they're adding features to the Vision Pro. That's the goggles thing, isn't it? I hate to bring this up, but you're laughing, David, but don't those goggles give you seasickness? They do me.
I'm not a fan, personally, but you jump in.
Google got rid of the whole program. I think this is a great way to set some money on fire. They seem determined to do it. I'll come back on the show in 6 months and tell you what happened.
Okay, all right. Let's move on to Spotify. New premium features being considered. They've got 120-odd million users, is that?
They crushed it last earnings season, but David can correct me if I'm wrong on that.
I think that 120 figure sounds right. We don't own it, obviously. They don't return cash to shareholders, but I do think that they've grown cash flow pretty well.
Mm-hmm.
Next one, Elon Musk's XAI, set to release a new AI chatbot. It's called Grok 3, okay.
People excited to see how this chatbot really compares.
But I can't invest in XAI, can I?
Well,
not directly.
No, but I guess they have a piece of it in Twitter now. So that's one of the things they're trying to do the debt on Twitter, and they're saying it would include a piece of his AI endeavor.
Got it. David is with us, of course, and he's brought his famous dividend picks, and he's going back to the well. He still likes Merck.
Yeah, well, we really like names when they are great companies that drop in price. You want to buy lower, and Merck has come down this year. Similar to what we were talking about with China, Gardasil is not being sold right now in China for about 6 months, and that caused the stock to drop a lot. Meanwhile, their Keytruda treatment here in the United States, their leading cancer treatment, is on fire. We think Merck is really undervalued. You have a big, juicy dividend yield that's grown every year for over 20 years. Merck right now has become a value stock.
Okay, at $83 a share, what's the dividend payout?
You're going to get about 3.7% that is growing at about 7% per year.
3.7% doesn't seem like it's very
We got to do
attractive
this
to a guy
again,
like
Stuart.
you.
We have to do this again.
Do it again.
We are not here to talk about high dividend stocks, which are usually stocks in distress. We're here to talk about growing dividend stocks, which are stocks where you wake up one day and you're getting 20% cash on cash. Like, I don't know, Blackstone.
You look exasperated. It looks like you're on the verge of banging on the table.
Well, it's okay. I have to just work with you on this slowly but surely. One day you're going to get it.
Here's another one where you're going back to the well. Kenvue.
Yeah, no, Kenvue we haven't owned too long because they just spun off from Johnson & Johnson less than 2 years ago. It's the consumer products group of Johnson & Johnson. And they had a tougher quarter, although it's come back up since, because they said that the cold and flu medicine was down. And I thought, well, that's weird. A lot of people had cold and flu this year. I think that that kind of, cyclical stuff never lasts. They own the best brands, baby shampoo, all these products, and they're really doing a good job cutting expenses out. We think Kenvue is a great story.
And the yield at $21
and you're
a
going to
share.
get 4% yield that's also growing year over year.
4%, mate, just fantastic. And a special thanks to David Bahnsen for sticking around for the full hour. It was fun, you have to admit that.
Always fun.
There you go.
Always fun.